Stan iz fonda vrednog 75 miliona evra. Posljednji put je bio u Beogradu u martu mesecu, a u ovoj epizodi saznajte kada će sljedeći put biti u Srbiji. Podcast 5 pitanja za je pokrenut sa idejom da damo odgovore na aktuelne izazove preduzetnika i startupa iz oblasti biznisa, financija, marketinga i prodaje. Tokom sedmice imate mogućnost da postavite ili glasate za pitanja, a na 5 pitanja sa najviše glasova odgovaramo tokom emisije. Pratite nas na svim većim podcast platformama i na našem YouTube kanalu.
Thanks a lot for inviting, Vladimir. It's a pleasure to be here. So, about myself, I actually graduated computer science back in the late 90s, early 2000s. Actually, I graduated 2001, I believe. But at the time when I graduated, I started working not in the information industry, in the computer industry, but in the financial industry, in risk management. However, I've soon realized that I'm much better with sales, and I'm more of a people's person. I prefer to be with people rather than just behind a computer. So I moved into sales organization from risk management, and in the financial industry, it's they're usually focusing people towards sales eventually. Fast forward 2007, I decided that I have 7 years of corporate life and I had enough of it. I wanted to start my own company and started a company. It was in the fintech space. The idea was to build a reverse auction for the banks to lend to best businesses. So if you have a business and you want a bank loan, you just upload your data online and they are actually bidding on you. It started well, but then the previous crisis, 2008, kind of killed us. However, I've been also I've raised some angel money. I had some American angel investors, but I've kept very good relations with them. And through this, I also entered into the startup ecosystem in Bulgaria back in the days. It was the early times of the startup ecosystem. I've also done a couple of angel investments myself and worked with a couple of companies. And that's how I got introduced to the team of LAUNCHub, where I joined from the beginning of the first fund. So first fund we raised in 2012 and started investing from 2012. And this was the time when I joined. And I've been doing venture capital thereafter. So I've been very happy. I've been fortunate also. And we as a fund, we also had our evolution. We started 2012 with a relatively small fund of almost $10 million, 9 million euro. We were doing mostly pre-seed investments at the time. But this allowed us to get very good knowledge over the entire region, over entire Southeast Europe. We've done a lot of investments. We were also running an acceleration program at the time. And we quickly realized that actually the big problem is not in those first 50, 100K checks, but what comes thereafter. So as an evolution to this, we raised our second fund in 2016, and now this year our third fund, which is going to be 70 million in total, 70 million euro in total. And we think there is a big gap on the market from, I would say, 300-400K up to 2 million, classic seed, pre-series A type of rounds where we position ourselves to lead, co-lead, and give companies enough capital so they could build great things and go out on the bigger markets and fundraise eventually, etc. And there I've been working mostly with B2B software, enterprise SaaS. I'm a huge fan of how machine learning is changing the industries, and yeah, that's it.
Nice. It's good that you have a lot of experience and you can see things from different aspects. So I think you are a great guest, and that the answers will be very useful for for our listeners. And if someone is watching us over YouTube, then good. One quick question: How hard is it to spend 10 or 40 million on pre-seed startups? That will be probably like, I don't know, a lot of startups to invest in.
It is operationally challenging, because when we were doing this, we are not doing this anymore, but when we were doing this back in the times, you have to have very efficient processes, because we were screening hundreds of companies over a week, right? So it's much more of a processed approach. Nowadays that we are doing more of a traditional VC stuff, like 1 million, 1.5 million euro, it's much more getting in depth with the company, much more thinking about different risks, different possibilities, what's the big opportunity. But back at the time, it was more about like processes and very efficient process and a huge network. That's another thing we were lucky enough to build, because we were early on the market. You need a huge network of people to help you, not just mentoring the companies, but also evaluating, assessing different projects within different verticals.
Yeah, I can guess, because I know one fund, they were investing like, I don't know, 10K tickets, and the fund was, I don't know, 30 million or something. So I was like, man, you need like 10,000 companies to go over so you can invest that amount.
We've never done 10K. Our first fund was average investment was 150K. Our second fund was 850, and in the current fund is 1.3, 1.4 million. So you could see that how it kind of evolved over time. But yeah, it's an order of magnitude difference from 2012 to 2020.
Nice. So yeah, let's quickly jump to the questions so we don't spend too much time. We try to keep the show around 30 minutes, 45 minutes, so it's easy to listen. So hopefully we will manage to fit in that time. But don't worry, take your time in answering questions. No need to rush. So question is, how do you define and determine which startup will be a potential and a good investment? Is it possible to somehow determine if there is future for a startup?
Yeah. So in order to decide which startup is like going to be a potential good investment, of course you never know, but in order to make an investment, somebody needs, like an investor needs to build a confidence, right? So you need to build, or even better word, conviction. You have to have conviction over a company, and you have to have conviction over the market that they are operating. You have to have conviction over the team that they are operating. And so practically, and it's a very nuanced, because like the overall market might seems great, but then what are the underlying trends with it? What are, let's say, what is the competitive positioning of the company? How are they fighting incumbents, if there are incumbents? How are they fighting? You know, the market trends? Are there headwinds, or are there like tailwinds? So practically, when somebody said, okay, we're in a great market, we are usually try to get 1 or 2 levels below, like much in depth, and understand, okay, what does that mean? You could easily quote big numbers in billions, and that's almost seen in many startup decks. You know, every market that I see is in billions. But then the question is, okay, what are the other factors on this market, right? And this very like this helps a lot. And I mentioned it, like competition, positioning, the subset of the market that they are targeting. How are they starting? How are they gonna achieve to own the bigger market? These are all questions that we are asking. The other big question is around the team. And when I said the team, it's usually the founders, but it's much more than the founders. You know, sometimes we most often we talk with the founders, and most of the time we iterate with them, and I would say 70-80% with the CEO, co-founder CEO. But a question that we are always asking is, okay, who's missing in the team? Because you might have a great founder, a great CEO, but then do you have the go-to-market machine, or do you have the product machine, or there are a lot of things. So one of the questions we also ask is, okay, who's missing in the team, and do the founders realize that they have a gap in this particular skill set? So these are like two of the things that practically determine our confidence in the team, in the market, our conviction, whether to pursue it forward. And of course, we talk with the customers. With the current fund, we have the luxury. We invest in companies that are post-revenue. So they are early revenue, but not like very rarely we invest pre-revenue. So we also have this luxury to speak with the customers to see how they like the product. Do they love the product? And that's also a big factor.
Yeah, I think with the higher tickets, of course, startups have to have some traction and some revenue and stuff. And yeah, I totally agree on the second thing. Also, I think Tanya from PwC mentioned that when you talk to the investor, if they ask you who's missing in the team, you better ask yourself who is missing, because probably someone is missing in your team. And yeah, regarding the first one, I guess all startups are like, who's your target group? Everyone. And then it's not possible. It's just so I totally agree on these three. Sorry.
Yeah, and just to add a couple of things. There are like always there's somebody missing on the team. You couldn't have a perfect team, but it's about, are you understanding or do you have plans how to attract the talent? Do you have already history of attracting top talent? So these are the things. It's not that you have to have the perfect org chart. You never have this.
Yeah, of course. And what I see in recent time is that earlier, I think most of the founders were like 3 technical people, and now there is a bit diversity. There is also financial and technical and I don't know, legal and stuff. So I think it's getting better.
Yeah.
Nice. Okay, let's jump to the next question. How often investors think that founder or CEO of the startup won't be able to run business in a few years, and why?
That's a very nice question, by the way, and I think it's very different for different type of investors. As I mentioned in the previous question, 80% or more we work with the founder CEO, and when we invest, we are early stage investor. We invest with a vision that this is gonna be the person who's gonna run the company over the next 10 years. So we never have this kind of a vision, okay, there might be like a different person to run the company. It's very different for late stage investors, or particularly in the PE, in the private equity, where they invest and very often there is some management turnaround. With us, we never, we have experienced this, but this was driven again for some of our portfolio companies that raised a lot of money and came at certain stage, and there were big funds, one company in particular raised hundreds of millions, and there were like big funds that were actually initiating this. But I think for us, the beauty is when founder CEO is actually maturing with the company. And we've seen this a lot of times, like how people are growing. So we never think about it. Again, getting back to the previous question, we always think, okay, who's missing, how to strengthen the team, but we haven't initiated a change in the management team actually, to be honest.
Yeah, seems right. When one as a founder or CEO comes in a position to talk to the fund, it's usually that he's too much into it to just quit in a year or months or few years.
Yeah. And usually these people, they're forming the culture, the early culture, when it's very important. And we invest also because of the culture, right? And like if you change the CEO, especially if it's a founder CEO, I'm not talking for like some big companies where CEOs are let go and are coming new, etc. This is completely different story. But for startups and companies at the stage we invest in, probably 2-3 stages after that, the main culture is built by those founding team. And there are some nice additions that are contributing to the culture. But I think that's the beauty. And very often we also form, I wouldn't say like it's sometimes I would say friendship, sometimes very close like business relations where we like talk different topics, and that's also part of the fun, right? To be able to speak with your companies.
A lot of people think that investors invest in technology only, but basically you invest in business as well, culture, as you said, and a lot of different aspects.
No, actually, investors never invest in technology. To be honest, technology is something that I completely like. Of course, there might be some thematic funds, AI, whatsoever, but it's mostly people that are driving the company. This is what we invest into, which doesn't mean. Sorry, again, I'm making when you don't invest, there might be a great company where you haven't invested. But, and this doesn't mean that I have seen great founders and for one or another reason we haven't invested, but there are certain things that, like other things that we are probably missing, or we're seeing it still not de-risking, etc. But most of the time is the teams, what you're looking for.
Yeah, usually technology is the, let's say, smaller part of the whole story, since of course technology is pretty advanced, and you can probably build some copy of Uber and for I don't know, maybe hundreds of thousands or tens of thousands, but again, this whole business is worth billions. It's the technology is rarely the bigger part. Nice. Okay, let's jump to the next one. To keep the pace going, do you invest in Serbian startups? And if you do or did, what's your experience with Serbian startups or ecosystem? I know you were in Serbia, or you're someone from your team, I don't know, maybe beginning of the year or end of last year.
Yeah. So of course we do invest in Serbian startups. I was there actually in March, lastly, just before the first lockdown, but we go there prior to the whole like COVID and new realities. We were there, I would say, at least 2-3 times per year, but sometimes more often. And we have made one investment, but we have screened a lot of companies. I would say we've met or screened like hundreds of companies, literally, just from Serbia in the last 8 years. And so my impression is the following. I think I like a lot that people are very driven. You could really like see this kind of a drive to do something, to build something. And this I would say it's true for the entire region. But I've seen this a lot in Serbia, people that really want to build. And very often when you go in some of the more mature markets, let's say the UK or in the US, there is also a lot of, like, for better word, bullshit. But a lot of people are like pitching you something, but it's more of a, this kind of a very well-prepared pitches, etc. But you never know like what's driving the team. And I've always had this question. While here in Serbia, I've seen a lot of driven people, and I like this a lot. I also think there are a lot of like good techies and a lot of people that are thinking from a product perspective, from a tech perspective. And the other fact, I've seen some companies that have found pretty nice niches that they have started with, you know. Currently looking at a company quite intensely that's like occupied one particular niche in the marketing technology space. What's probably some of the things that might be improved is very often there isn't that well-defined go-to-market strategy. And in particular, you know, I think you mentioned it pretty well at the beginning, you know, this kind of doing everything for everybody. And early days, you need to really pick up, like, be very sharp, focus, very laser focus. And that's important to build. And that's part of the overall go-to-market exercise. So this is something that that's probably missing to an extent. Of course, there are always good companies that have gone through it. And I think what I've also observed, you know, I have this, you know, there are like two, it's a very simplistic, but rule, you know, there are two important numbers in the startup life, $1 million and $10 million. And $1 million means that you have a business. You know, once you are above $1 million, it means that you really have a business. Before that, it's trial and error all the time. And very often that's why they said this is kind of some indication of product market fit or whatsoever. And then like after 10 million, you're exitable. You know, there is enough revenue that a lot of people could see value in your company. But I've seen a lot of companies struggling to get somehow to this 1 million. Of course, we invest much before that, but this is kind of an important number overall. And I think part of it is because of this real lack of focus or choosing a good niche or like just knowing
going too wide or
going too wide, knowing what's your exact value proposition for a particular group. And final touch, but we don't invest in such. We've seen a lot of like kind of a businesses, something for Serbia or something for the Balkans, you know, copycat of big companies. We usually don't invest in such because we also look at certain size. You know, for one of our size, we need to be able to project how this company could become $300 million, $500 million business, and that's at the exit value. And that's not always the case if you're building just copycats, especially over small markets, which are unfortunately in our region.
Yeah, and I guess that's why a lot of startups here try to go global, but then they go too much. So maybe focus on region.
That's the go-to-market machine. Like the go-to-market strategy, the go-to-market machine.
Yeah, and as I say, I think we are still not. We are, of course, ecosystem is growing, and we are not natural born sales. So I think we are lacking that part.
That's applied to all of us. Like that's in Europe in general. This, of course, is changing, and maybe what I still think it's important. There are good cases, of course, in the gaming, in some other verticals, in some niche products. But you know, the more cases you have, and not just as showcase, not just to show that it's possible, but also people that have gone through such companies, then they are actually great hires or great founders or great early employees, etc. And that's something that, like with the maturing ecosystem, I see that it's coming more and more.
Well, I think we managed to cover this question. So let's jump. We have two more. How startups know how much money do they need and how they will further scale?
That's I'll tell you a joke. A friend of mine who was CEO of a portfolio company, which we exited. He was a Croat from Croatia, but he was saying, you know, you raise as much as you could tell to your investors without waffing. So like the biggest number that you could tell and stay serious. And of course, this is a joke, but usually I like to think in terms of, there are some rule of thumbs, but I like to think in terms of time frames. And we usually encourage companies to project, let's say, in 18 to 24 months time frame when they are fundraising, because on one end, this is enough time to be able to drive the company to another level. So if it's less than 12 months, sometimes, yeah, you might be lucky and things might get, but usually, you know, this is enough time to have a significant difference, let's say, even in terms of revenue, but also team scale and everything. So first rule is when you fundraise, try to project how's your company gonna look in 18 to 24 months and how much money will it need. And let's say if you're making today 20K, and you're raising on this 20K monthly revenue, and then in 18, 24 months, you want to be at 200K, you need to make your good kind of a good projections, what this requires. And then provide some margin of errors. What I've seen in our region and in Serbia in particular, usually people are raising less. This is very different if you go in the UK and the US. People there are trying to raise always on the higher end. And in our region, because there aren't that many funds, not very mature market, people are trying to pressure it down, but probably leave some margin of error, because you definitely make some errors. You have some hires that are not great fit, etc. And raise with this notch in mind. Another approach that I've seen is, and I've heard is some investors, especially in the US, says, you know, in order to get to 10 million in revenue, you need to raise 10 million, especially in enterprise SaaS. Now, whether it's true or no, I don't know, and it's a very simplistic rule. But my impression is early days, you're investing more to get less revenue, but at a certain point of time, you're getting these inflection points where you need to drive revenue. And also nowadays, I think companies that are growing at any cost, so unsustainable growing and such type of companies are also punished by the markets, because in the previous 3, 4, 5 years, it was growth at any cost. Now it's much more about, okay, the fundamental growth where unit economics are solid, and you're not just buying your customers, but you are having a solid business.
Yeah, I totally agree, and those were like two things that crossed my mind as well. So cutting into milestones and projecting what would be the expenses, let's say, because you're not raising investment to spend on yourself, but to invest into business. I mean, for the founders.
Which is also paying to yourself, right? I think founders should be well paid. There are some theories that if they are much overpaid, they are getting a bit probably not that ambitious to build the business forward. But also if they are underpaid, they're eager to exit too early because they're lacking the money.
Exactly,
so I think there is a nice balance. So I think founders should be pretty well paid. They don't have to think about money. They have to control the business on one end. And on the other end, of course, investing into the business. You're taking money to invest into the business, which is yourself as well. Your salary as a CEO is also part of the business growth. Yeah,
of course. When some startup raises investment, basically founders set salary for them, some amount, let's say, which, as you said, should be enough to live, but not overpaid, so they neglect the business itself.
Yeah, you shouldn't go on yachts or buy, but that's again, I don't think people like from Serbia and from our region have this tendency. Maybe this is more of a for more mature markets.
Yeah, great. Last one, final question. Can you name the 3 most common reasons that investors reject startups? You mentioned some stuff, team, that you're looking at the team, at the business culture, fit, and everything. So
I think most of the time it's probably not a right fit. It might be a right fit in terms of stages. So, for example, you know, you say, okay, we invest like post revenue. Our sweet spot is 10 to 50K or whatsoever. And if it's company pre-revenue or something else, then so it's very important for your listeners to make a good due diligence also on the investors and know, okay, what are they looking to invest, both in terms of stages, in terms of industries, what are they excited about. In our fund, I would say we are invest in everything software and digital services, but still like 70% of the portfolio is B2B software. So that means that like two out of three are in this category. So probably there is bigger chance. We have some great end consumer investments as well, but this is something. So when there is a kind of a mismatch, that's one important thing. There are a lot of things that people could read, like sometimes there might be not very good cap tables, too much dilution, a lot of things. I personally think that if an investor fall in love with a company and with the founding team, we have a lot of experience how to deal with those things. So it's not something, but it's more importantly, it's like you need an investor who's buying your vision, right? And this works both ways, you know. Investors need to buy into the vision of the company, into the founding team, into the market, but also like startups, like and companies need such investors, because if somebody is investing without buying into your vision, sooner or later you'll have a clash with such an investor, and that's not a very pleasant thing. And to be honest, we've done such mistakes. You know, we said, okay, like we have invested for one reason or another, but we are not aligned with the vision of the company. And very often we stay with those companies. We don't fight. We don't have this nature of fighting our portfolio companies. But it's disservice to everybody, because we are getting a bit disinterested, and then we are also not a good advocates. And you want your investor to be your best ambassador, right? So this is very important to have a common vision, and this is probably like most of the time why, from one reason or another, investors are. And then there might be other very important reason. I kind of just touch point on this is like for a fund, it's very important. You know, we need to return money to our investors. We also, as a fund, have investors. We are also fundraising. Typically, fund is fundraising for 2 years, not for 6 months. So it's much more complex and complicated process. But let's say if we are 70 million fund, we need to return this money to our investors with a profit, etc. And this is also very important, because when we look at the company, we have to project what's the potential scenario of this company, and this is important. And when we were a 10 million fund, it's very different how we made decision now that we are 70 million. It's completely different, because the exit that we need is much higher, right? And this is also important. And sometimes there might be a great company, a great team, but just the market is somehow not enough to provide for these outcomes, and it might be a great business as well, but it's not depending on the fund size and the fund scale. It's not a good fit. If you're $1 billion fund, and there are a lot of $1 billion funds in more developed markets, it's even harder, right? Because yeah, you have a lot of money and you can you see a lot of opportunities, but then how much so for us, an exit of 300 million, 400 million would be a very good exit, and we could return very good amount to our fund. And somebody with bigger funds just couldn't afford to have this opportunity. So it's a matter of this sizing as well, and your listeners need also to take this into account when planning for fundraise.
Yeah, you gave very good angle, which rarely, I guess, anyone thinks about. That usually they think how to get money from the fund, but never think about how the fund is getting money and. Basically,
I think it's important for founders to know how fund operates, because this gives them another window to look through, another lens or another opportunity to look into the fundraising.
Yeah, definitely. Cool. Thanks a lot for the answers. I think you gave very good value bomb. So hopefully, listeners and guys that watch us through YouTube will have a lot of new information. Maybe something for the end. I would ask everyone to follow LAUNCHub. You're mostly on LinkedIn active.
Yeah, myself, I'm on LinkedIn. Some of my partners and colleagues are also on Twitter and other channels. But I have a very good feeling, and I'm very bullish on how a Serbian market and Southeastern market is developing. I think there are already some success cases for big companies, and this is driving the appetite up. And we are people with a general, this kind of agility and want to build things and all this stuff, which I think is very important in the current market.
Nice. Do you have some time frames when the applications are open, or you?
No, we don't do applications. We are looking all the time at different companies. So whoever's fundraising, shoot an email or an intro through Vlad. We will be happy to speak. We are currently looking at quite a few companies from Serbia, but we are always having our pipeline full. We are 10 people now, so we've also increased the team a bit, so we have more capacity. We have some amazing new team additions that are helping us with evaluation and talking to companies. So we are looking all the time for companies we don't have.
Great. I'm not sure how the situation will be with the pandemic. Hopefully we will see you soon again in Belgrade, in Serbia. Not sure what are the plans, maybe beginning of next year, similar to this year.
I was planning to come Q4. I was there, I told you, I was there lastly in March, just before the borders closed. I was planning to come to Q4. Let's wait probably for another couple of weeks to see where the things are going.
Nice. Okay, thanks a lot. Have a great day, and hope to see you soon in Belgrade.
Thank you. The same to you, and all the best to everybody.
Bye.